2017 was a year that was really marked in the oil sector by what OPEC did, steering the price higher. We're talking now to Malcolm Graham-Wood from malkysblog.com. Malky, welcome.
Thank you.
We follow an oil bucket list with you. I want to talk about the bucket list in just a minute and how that performed. But what's your view of 2017 from the oil sector and the oil price?
Well, last year was, to a certain extent, a year of two halves. It often is. You often get a more difficult first half, and the oil price sort of fell to about $45 in the end of June, and it didn't look like it was going to pick up as strongly as it did. But as long as you had faith in the oil price picking up, because you needed that non-OPEC and OPEC agreement, particularly the relationship between Saudi Arabia and Russia, then it was going to work, because they cut back enough to keep that residual oil barrel tight. And as long as that was tight, you were okay. No one flinched. They kept their production cuts, including Russia, at 300,000 barrels a day. In fact, Saudis, I think, cut back quite a bit more than they needed to. And of course, second half, you get quite a lot of demand increase. So it picked up gradually and then kicked on. So instead of being $45 at June, it ended up at about $66.
Yeah, which of course is what you were going for. I know we spoke around June last year, and I know a lot of people thought, crikey, he's hoping for a lot. Let's take a look, if we can, at your bucket list, because
very mixed bag.
Well, yeah, it is a mixed bag. If we bring up the list of stocks as they performed, a couple of years ago, well, I think actually 2016 was a tremendous year for your bucket list. As you say, it's been a bit of a mixed bag. What about small cap oil stocks and the relationship with prices there for the oil price? How much of an influence is the oil price on small cap?
Well, it should be more than it is at the moment, funnily enough, because with the oil price up at high 60s, one of the things that the oil industry did during the lower prices, i.e. back down to 27, was they cut their costs absolutely dramatically. Costs were down at by 50%, if not more. Everything from seismic drilling to rigs, and they cut back a huge amount, and therefore, I remember last year looking at margins for oil companies, which when they had been at $115 compared to what they were at $50, and they were high. The margins were up. At $50, they were higher than they were at 115. Now that the oil price is high 60s, these companies should be making out like bandits. Of course, there are companies in there which aren't producers.
Exactly, yes.
So, they shouldn't be in line with the oil price, but some of them have got potential for production, and we take it on. And don't forget, the bucket list is meant to be just that. It's meant to be a list of things that will give you protection. The upside will do well for the producers, the downside will protect to a certain extent. It's meant to be because you have a dozen stocks. I know most people try and pick out the ones they think have got the sort of sex and violence, but in fact, it's meant to be a list. It always was. It was started 3.5 years ago in order to be just that.
Yeah. Let's take the first one on the list, because I want to take some of the big movers. 37% decline for SDX Energy, this company which is a company which it's got this way of producing oil. It doesn't actually produce, does it, at the moment?
It's called fractured basement, and the reason for that fall, and the reason that I'm sticking with it big time, is that they have moved from being a pure exploration to funding the development of what's called the Lancaster field. And so this year, and you'll see from the share price chart, that they had to raise $530 million back in June. And you can see what happened there. There was a sort of mucked up warrant issue, which brought the share price down. And anyone who takes $530 million of equity and convertible out of the market will experience a significant indigestion. But the fact they managed to raise over $500 million is astonishing. They did it a day or two after a few days on the road, and that was quite astonishing. Now, the good thing about Hurricane is that this is going to be producing first half of 2019. And I expect that to actually happen. I went to Dubai only 2 weeks ago to look at the FPSO, which is being upgraded especially for them, and I think that's ahead of schedule. And therefore, in a year's time, we'll be sitting here saying, any minute now we're going to get production from Hurricane. And when it goes to that stage, the key thing is they'll frank a proper value on Lancaster. At the moment, the fact that you mentioned fractured basement is important because there are a number of companies who would like to farm into this project, but no one is 100% convinced that it's not going to water run or anything like that. Now, I believe in the CEO, Dr. Robert Trice, who says it's not going to do that. And as and when that happens, there'll be a huge auction and the price will go through the roof.
Yeah, in the meantime, at 31.4 pence, would you buy it at these levels, or do you think it's got more downside?
No, I don't think it's much downside. It stayed at around these levels since the placing. You have to be patient, but it may be that one of these companies thinking about buying the company will jump the gun and come in a bit early, and this will be an insurance policy. I think the risk for Hurricane is not being on board, as long as you're not a sort of short-term trader. I think the risk is not being there, and you should have it in the portfolio.
Okay, second one I want to talk about, Sound Energy, 31% down last year. And in fact, all these charts we're going to show you, there's a vertical blue line, which is the beginning of last year. And here we have it, the second stock here. This time last year, we were talking about a tremendous story. You were really excited about Sound Energy, but a little bit of air being taken out of the share price.
Yeah, and 2 or 3 things have happened with Sound. First of all, the Italian well in Badile didn't come in, so that was a big disappointment. But they have now taken the Italian assets out of the equation, and they've merged them off with a company called Coro. So Sound, first of all, doesn't have the Italian assets anymore, and it's got 2 significant Moroccan plays. So Sound is a changed beast now, and they've got let's say these 2 potential ventures in Morocco. Both should be very significant, but it's a breathing point because effectively, it's changed in the last years, and all the action we're going to see now will be Morocco, will be in the next few months. So, if you believe that James Parsons and his team are extremely efficient and work very hard on their retail shareholder base, you'll believe in Sound, and I think the people are right to believe in Sound because there's still plenty of upside from here.
Yeah, share price, a big gap opened up at the middle of the year.
That was the dry hole in Badile in Italy.
Yeah. Okay, since then, trading at 51.2. Let's move on to the next one if I can. Amerisur, down 30% overall last year. I think they've just come out with an update, haven't they, Amerisur?
Yes, they announced this morning, but this is the one which is almost as difficult to read as anything. It continues to increase its production in Colombia. I went to visit, and it's not an easy place to work in, but things are changing dramatically in terms of local politics, and things are getting better all the time for Colombian politics. And therefore the area they work in, which has been historically the most difficult one, but is now looking more. So in the area they work in, primarily the south of Colombia, their production is picking up quite nicely. They said they would do 7,000 barrels a day by the end of last year, which they've just announced they've done. I think they've got medium-term plans to do between 10 and 12,000 barrels a day, because of course they've got this tie-up in the north with ONGC, which is the Indian state company, in a thing called CPO5, which could turn out to be really substantial. Put those 2 together, this share is massively undervalued. If you're going to produce 7,000 barrels a day this year, probably a bit more, and then going up to 10 or 12,000 barrels a day, at $66 a barrel, it makes the company look outstandingly cheap. It's run by, I tend to believe in the guy on the ground, and on the ground is the guy called John Wardle, who's absolutely first rate, and so I'm going to give it the benefit of the doubt.
Yeah, 19 pence share price at the moment. You talk about upside potential. I mean, if we look back at the share price, this 3 years ago, it was all the way up at 45 pence, 46 pence.
Yeah, I mean, I'd easily go back to that level. Doubling it would be no problem at all.
Yeah. Okay. Victoria Oil and Gas, big success story. Kevin Fu and his team, and producing gas in Cameroon.
In Cameroon, and what is more, they're increasing their drilling capacity, and so at Logbaba they've just had 2 very successful wells to increase their gas into the system, and they've got potential from Bemono when that's the deal with Bolivar, if that goes ahead, and then Matanda, which is the huge block adjacent. What is more, they're selling the gas into a market where they're primarily the key seller, and they're selling it to power generators. Enio is the state power generator, and they're also selling it to a number of big local businesses, the Guinness and some of the key industrial companies. So, and this is somewhere where the alternative is heavy fuel oil or diesel oil, and people are trying to get cleaner and more efficient. Victoria Oil and Gas over the years have been completely unrecognised because what they've done is create, by stealth almost, a fantastic pipeline system into Douala, which is the second city of Cameroon, but the biggest. It's a port city, the industrial city. And I don't see anything going wrong at all. So I think there's lots of upside for this stock. Going back to the previous levels of this year would be no problem at all.
Yeah, it's Victoria Oil and Gas is well off the highs this year. It's been a lot higher than it has at the moment. 82 pence, I think, the highs. So almost double from where we are at the moment. But yeah, interesting story. This brings us into some of the big gainers. SDX Energy up 68% last year. This is a real choice pick, wasn't it?
Yeah, SDX was obvious to me the moment I sort of set eyes on it, because they did a very, very sensible deal by buying the Circle Oil assets. And Paul Welsh and his team have got concentrating on Morocco and on Egypt. And a year ago, people would have said the key areas would have been Egypt. Now, they've still got fantastic assets in Egypt, and they've got plenty of opportunity to develop existing assets and have exploration upside. But at the moment, the market is concentrating on Morocco, where in their preliminary drilling out of their 9 wells, the first 3 all came in, which means that their potential gas throughput at the beginning of this year is going to be 50% up on their initial expectations. So they're selling the gas. So one of the reasons that share price is doing as well as it is it's delivering the goods, it's finding the gas, it gets it on the stream. You know, just like we were talking about Cameroon, in terms of Morocco, there's a big demand market in country. The wells are cheap, they can tie them into their clients very quickly. You know, they can be on, you know, a successful gas discovery can be selling into the client within 2 to 3 weeks. They're only 3 out of a bigger program in Morocco and a big program in Egypt. I see nothing but upside for this company, you know, just doing deliberately what it wants to do in terms of in-country. And I'm very impressed.
Risks? I mean, you're talking a lot about positive.
I mean, people say the risks are in Egypt of getting paid. Which historically has been a problem, but they don't find it a problem for a couple of reasons. First of all, they tend to say that, you know, for people who want to pay them in Egyptian pounds, anything that they spend in country, they can take Egyptian pounds because they can spend it on Egypt. So it's any stuff they need to, you know, to pay international bills or repatriate. So it's not anything like as much as people think. And secondly, you know, if they're patient and they have good relationships with the people they sell the hydrocarbons to, they'll get paid, and they are at the moment, you know, getting paid, you know, pretty regularly.
Let's move on to Jersey Oil and Gas, another big gainer. It's up over 50% this year. And the team at Jersey Oil and Gas had a tremendous year actually in share price. It has been a little bit rocky.
Well, I mean, yeah, this is a chart to thoroughly enjoy, because and it gave you a full trouble, because the reason for putting this in was, you know, this is part of the bucket list. This was really high risk. It had an asset in the North Sea called Verbier, and it farmed it out to Statoil. I mean, what a dream ticket that was. Statoil wanted to come in, and my people at Statoil said it was on the top 4 of their international exploration projects in 2017. It turned out to be pretty much their best one, and the reason for that was that, and then they came to drill it. It wouldn't be all or nothing, but if they came in completely dry, it would be a bit back to square one for Jersey. The initial well looked like it was going to be dry, so the market fell dramatically way back in August or whenever it was. But the consortium decided to drill a sidetrack because they were so confident there was something to see there. They drilled a sidetrack where they should, and it came. So of course now
you came in here. You're talking about the fact that Statoil wants to do this. You were very positive on that.
I was very positive. You know, the very view that the fact that Statoil wanted to have a go at this, for me, was most important. It was a high risk thing, but I think this is a 5-bagger with no downside from here.
You talk about sex and violence in the whole list. This produces sex and violence. So
I think they'll buy some production in the meantime, but they'll have an appraisal well on Verbier, and then they've got an exploration well as well.
All right, 5-bagger for you. Aminex, 41.2% up on the year. This is an interesting stock, and we've been following Aminex for a long while here. In fact, looking at the beginning of the start of last year, it had a tremendous upside, but then all of a sudden we got a little bit.
I mean, if I'd been a sort of trader, I probably would have just taken it out at the moment, because it went up by about 5 times about a week after I tipped it. and since then it's had a couple of technical problems. It in the one of the gas wells blew out, and I spoke to the head engineer, and he said we had to mud it out, otherwise it would have blown up half of Tanzania, which indicates that the pressure of the gas was there, it just has to be managed carefully. And since then they've had 1 or 2 technical issues. Aminex has got a strong management team, and it's building up to a stronger team already. It's got a fantastic backer because it's got a big shareholder from the Middle East who's prepared to back it all the way. I wouldn't be surprised to see it doing other things, but I think the value of this Notaraya prospect is way above current share price, and I think it will deliver it this year and next. So, I'm happy enough with Aminex. If it had stayed up at a higher level, I might have taken it out of the bucket list when it comes up for renewal in a few weeks' time. But I'm still happy that if you take the price since the peak, it's probably halved again. But no, I'm happy enough.
Let's just have one more revisit, if we can, of the main list, because there's a gap that's opened up there. That was where you took out Ithaca, of course. That was taken over, wasn't it? The company.
And that was one of the most successful.
That was a very, very good one for you. So we've got a gap there. But Bowleven, you've already mentioned actually Bowleven. 33% up last year.
Well, Bowleven is a shell now, pretty much, and so that'll come out in next week when I restructure it. But it's a shell which has got 2 assets which are doing pretty well. The Bameno asset is being sold to Victoria Oil and Gas, and I think that someone will come in and take the other African asset, whether it's New Age or someone like that, or But either way, the development will start happening. Therefore, I think that there is a huge amount of value in that. It won't reappear effectively because it's effectively a cash shell, but. It's done well for clients, and that was what the plan was.
Indeed. Okay, all right. So look, Malcy, we'll leave it there, but thanks indeed for joining us. Malcolm Graham-Wood from malkysblog.com with a look through his bucket list. That is going to be revised, as Malcolm alluded to, that there will be a reassessment of some of the stocks that make it through to 2018. We'll have Malcy back in the studio here with some more analysis of his bucket list as he re-establishes that list come February this year.